Hello friends, in this video we are going to discuss the entity concept of accounting. Entity concept is a very fundamental concept in the process of accounting, and it is also called the business entity concept or the separate entity concept. Business entity or the separate entity concept. So let us see what entity concept is. In entity concept, it is said that the business and the owner or owners of business are separate entities. By that we mean that suppose this is a business. Let me draw over a business for you. This is a business, and say this person is the owner of the business. So this concept says that the business and the owner of the business are separate entities. There is a thin line of difference between the identity of the business and the identity of the owner. The owner and the business are not one and the same. They are different entities. From the point of view of accountant will view the owner as a separate person and the business as a separate person, and he will strictly record the transactions of the business only. He will not record the personal or private transactions. Personal transactions of the owner will not be recorded. Only the business transactions, only the business transactions will be recorded in the books of accounts. So entity concept says that the business and the owner are separate entities. There is a line of separation between them. Now let us see. Separate set of books are maintained for the business by the accountant. So let me draw once again. Say this is the business and this is the owner. So for this business, separate set of accounting records, separate set of accounting books or records are maintained, and this is the line of difference, and the owner's personal transactions are not recorded in the books which are kept for recording the transaction of the business. Say this is the books of accounts. Say let me draw a book. Hope it looks like a book. Let me write accounts. Say this is the books of accounts of the business. Now say the owner of the business is a very rich person. This person is a very rich person, and he has different properties in forms of say land, and he might have other businesses. So let's assume that from this land which he owns, he earns a huge profit. From this land. Say by using this land, this person who is the owner of this business owns a profit of rupees 1 lakh. So will this rupees 1 lakh so will this profit of rupees 1 lakh be recorded in these books? Will this profit of 1 lakh which this person who is the owner of this business earns by using his lands, and these lands are not the part of his business but are the other properties of the owner? So will this profit of rupees 1 lakh be recorded by the accountant in the books of accounts kept for this business? It will not record it, because this profit which was earned by the owner is actually the personal income of the owner and not the income of the business. So the accountant is only responsible for accounting transactions that are related to the business of the owner, that is in particular of this business. He is not going to record any other transaction apart from the transactions that happen within the scope of this business. So since the profit earned by the owner, by using this land does not become a part of the profit of this business, so it will not be recorded in this set of books. So let us see other part. Now in the next point we can see that all transactions with the owners are recorded in the books of accounts. So why this is so? Since the business and the owner since the business and the owner are separate entities, so any transaction that the business undertakes with the owner any transaction that the business undertakes with the owner is considered as a business transaction because they are not same. So for example, the owner invests capital into the business. So owner invests capital into the business, and this transaction will be recorded in books of accounts. Books of accounts. Similarly, the business pays the share of profit earned to the owner. Business pays profit earned to the owner. This transaction will also be recorded in the books of accounts because as per entity concept, the business and the owner are separate entities. So any transaction with an outsider or a separate person will be recorded in the books of accounts. Now let us see. The main objective of entity concept is to help that the business affairs and the private affairs of the owners are not mixed up by the accountants. So as we have already discussed that only the affairs of the business will be recorded by the accountant and not the personal affairs. So these are the set of books, these are the accounts of the business. Here only business transactions will be recorded and no personal transactions of owners no personal transactions of owners will be recorded. This will not be recorded. Only business transactions will be recorded. Why this is done? This is done to get a clear picture of financial results of the business. As we have just now discussed that the owner earns a profit of rupees 1 lakh from his private lands. So if that profit is also recorded in the books of accounts of this business, then will the figure of profit reflected by the books of accounts for this business will actually be the actual profit earned by this business? Will that figure of profit be a genuine one? No, because it will include a personal profit of the owner which is not related to the business. So to get a clear profit of the profit and financial results, that is profit or loss earned by the business, how the business is performing, and yes, how the business is performing, the accountant needs to record only the transactions of the business, and he should not mix up the personal and private transactions of the owner with that of the transactions of the business. So this is the end of the entity concept. Thanks for watching.